Good evening. It's Brian Paragamian, Senior Trader and co-founder of ProfessionalStockTraderLive.com, bringing you the technical analysis video update for Wednesday, February 18th. Well, today the stock market nearly got down and tested out the lows from November 21st of 74.49. We did not quite get down there. We traded on both sides of the unchanged level quite a bit today. The big story was President Obama came out today with the plan that is headed at preventing more foreclosures. I think that's one of the smartest and best things this government has done in a long, long time. I don't care who the administration is. I think it was absolutely great. Again, look at the surprise, though, or the muted reaction in the stock market. I am not surprised by that at all because I think, as I've talked about for months here, the stock market is going down, retesting at a bare minimum the lows, and more than likely taking them out. Now, what I do want to talk about today is gold. The relationship between gold, the XAU, and oil. I know there's a lot of talk out there that gold's going a lot higher, and really, gold moving higher is a bet against America. And I don't like to bet against America for too darn long. So let's take a look at what I'm looking at for gold and what I think is going to happen. And we talked about this quite a bit, but I think it's rather important right now that we look at what I'm about to tell you. We saw looking at the purple lines here, we saw this wedge formation. We saw it break down out of it back into the 50-day. Then if we look at this first set of yellow lines, we had another wedge set up, and gold exploded out of it off the 50-day and rocketed. Then we backed off. We then formed another wedge formation here, and we busted out again to the upside. Now today, gold closed up around 985, traded up as high as 986. Now, back when gold was in the low 800s, we talked about gold on its way back to 1,000. Well, we're down near getting there, and we think gold is going over 1,000. But we put the caution flags up right now because while we think gold is going to move higher here in the short term, we think you have to be on the lookout for a reversal in gold. And there's a couple of reasons for this. One, if we take a look at the high we've got here on gold, let's look at what we've got for the XAU, which is the gold stocks. Well, the XAU is not making new highs as you have gold. And if we look at the same time frame here, you had the XAU up around 155 when you had gold trading around 925. Well, now you have gold $60 higher roughly, and you still have the XAU 20 points lower. So that's point number one that I see as a warning signal. Point number two is I don't think we're going to see as much inflation, if any, as people are perceiving. Even though we're flooding the market with money, the government's very cognizant of this, and they're going to reel money in when they have to if they see any whiffs of inflation. So I don't really think gold is that much of an inflation play as people are telling you. In fact, you're in the deflationary period right now. I mean, just stop and think about it. Housing prices are down, food prices are down, gasoline's down, oil's down. You're not seeing a real inflation here. So while I know people are moving into gold for, the hard-based asset, the thing we have to think about is gold and oil typically move together. And if we take a look at the price of oil here, we can see what's happened here. Back when you bottomed out here in November, look what's happened since you bottomed out. Oil has continued to drop in this period here. And let me just go ahead and draw a line here. Right in here is when the stock market bottomed out, right here on November 21st. And look what oil has still done. Oil has continued to drop. Okay? Look what gold's done. Gold has rallied. So I think at some point you're going to have to normalize this pattern here where both gold and oil kind of move in the same direction. Will oil rally or will gold decline, or will they kind of meet in the middle? So I just wanted to present this here to you right now that I think gold is an accident waiting to happen. Wall Street always seems to go from boom to bust, as we've done here over the recent times, the last 10 years at a minimum. You had the semiconductors and the dot-com stocks, boom to bust. You had the housing stocks, the financial stocks, the chemical stocks, boom to bust. I think we're looking here again at the same scenario stopping with the gold futures, boom to bust. The gold stocks to me are telling you this. Oil to me is telling you this. I don't see inflation like everyone else. Even though I'm bullish here on gold on the short term, and I think it's going over 1,000, I think you have to be aware that gold is a trap, and I don't like gold longer term. So having said that, let's just go ahead and take a look at a few stocks that I do like from a trading standpoint here on the very short term. I think if we get any pull down in Mosaic, this stock here is back into neutral territory. It's back into some support zone in this 38 to 40 area. As you can see up here, it closed up $1.34. I think Mosaic can be played from the long side, on the long side radar, on any pullbacks. Now again, let's remember here, what a real poor performance today we had in the Dow. Up 3 points after a big down day yesterday. That just tells you they're uninspired. They're not really enthusiastic about being buyers here. We think eventually the Dow's heading down to 7,000 and maybe going to take out that 7,000 psychological level. So Mosaic would be a stock where we'd look to play from the long side. One stock will tell you that we potentially would look at playing from the short side, and that's BP, British Petroleum. As you can see here, the stock on all rallies continues to make lower highs, as you can see here in these two spots right in here. And then look what's happening here. We're ready to break down below this 39.5, 40 area. And I think a break below 39.5, 40 would usher in a lot more selling, taking us down, testing out the 37.5 level made back in mid-October. Just to illustrate this here, if we take a look at another stock we have been talking about as being a short, is, if the stock will come up here for us, is Whiting Petroleum. We talked about this stock here breaking below 27.5, and as you can see here, when it broke below 27.5 here in the last couple of days, look what it did. It absolutely got buried. 25.5 now. So I'd look for the same thing to happen in BP over the coming sessions. Now again, you have to let the stock break down. If you're short in front of it, you don't get the breakdown, you potentially could be trapped. So you always got to play the numbers that's out there. The one other thing I want to talk about, I've talked about, is even though we think the Dow is heading lower here over time, down to the 7,000 area, we're going to probably more than likely see divergences as a NASDAQ. The Dow basically touched its lows here today. The NASDAQ still 10 to 12% off the lows. I'm a firm believer technology, the semiconductor stocks are the place to be going forward, whether it be Texas Instruments, TXN, CLAC, it doesn't matter. A safe way of playing it is the SMH, which is the semiconductor ETF. I think that's a spot that you can look at being long for the long term. That's what I like here to lead us up and out of this recession, and maybe we're on the brink of being in a minor depression, my opinion. But anyways, we don't have a whole lot else to tell you other than we had one trade today. We had a trade in Freeport-McMoRan that we bought when the stock market was down. We thought the stock was acting well. We made nearly a point on the trade. We have nothing else to report. Join us in the morning for our live webcast. Have a great evening. We'll see you then.